This week, r/EU_economics hosted a live AMA with investor Steiner Svalesen, offering sharp insights into Europe's startup scene. Svalesen stressed that Europe's main challenge isn't talent, but a lack of patient, scale capital for startups to grow globally. He noted, Europe has plenty of talent. The real bottleneck is scale capital. Unlike the US, European startups struggle to secure long-term investment, making it tough to compete at scale. Svalesen also flipped the script on regulation, arguing that a stable regulatory environment can be a strategic advantage if founders adapt their business models accordingly. Regulation is only a burden if you don't adapt your business model to it, he said, urging startups to embrace rules as a moat against less adaptable competitors. He highlighted the growing investor interest in climate tech and automation, and advised founders to focus on distribution and partnerships early, because a great product alone isn't enough. The AMA made clear, Europe's innovation potential is huge, but unlocking it requires both strategic adaptation and access to growth capital. The conversation set the tone for the evolving landscape of European enterprise. Russia's economy is showing clear signs of trouble, with Q1 2025 GDP growth dropping below 1.5%, a marked slowdown. Manufacturing and retail are contracting, with factories running below capacity and shops closing, signaling deeper economic distress. Many in the r/EU_economics community question the reliability of official data, suspecting the real numbers are worse. As one user put it, isn't growth much more likely negative already? This skepticism makes it hard for analysts and investors to gauge the true state of Russia's economy. The lack of transparency complicates policy and investment decisions, highlighting the need for honest economic reporting. Russia's economic uncertainty is now a major concern for both domestic and international observers. The Eurozone's latest data shows business activity flatlining in June 2025, with both manufacturing and services losing steam. This stagnation, paired with persistent inflation above the ECB's target, puts policymakers in a bind. As one forum analyst noted, stagnation plus inflation stalls outlook. The ECB faces tough choices: stimulate growth and risk more inflation, or hold steady and risk deeper stagnation. Recent rate cuts have sparked debate. Should the ECB ease further, or wait? Businesses are caught in uncertainty, facing high costs and weak demand. The second half of 2025 hinges on whether inflation eases and confidence returns. The ECB's next moves will be critical for the Eurozone's economic direction. A new study shows that Reddit sentiment can help predict economic trends in real time. By analyzing posts on forums like r/EU_economics, researchers found that online mood often signals shifts in employment, inflation, and business conditions before official stats do. As one data scientist put it, crowdsourced data has huge predictive power. Natural language processing scores Reddit posts as positive, negative, or neutral, then feeds this into traditional economic models. The result: more accurate forecasts for consumer confidence and even GDP growth. This approach gives policymakers a faster, more nuanced read on the economy, democratizing economic analysis. As digital life and the economy intertwine, online sentiment is becoming a vital tool for understanding real-world trends. This week's stories, from investor insights to macroeconomic signals and new data tools, show a European economy in flux. Svalesen's AMA highlighted the urgent need for more growth capital and strategic adaptation among startups. Meanwhile, Russia's slowdown and Eurozone stagnation revealed the persistent headwinds facing the region. The rise of Reddit sentiment analysis marks a shift in how we track and understand economic change. Staying informed now means blending traditional indicators with real-time digital signals. Communities like r/EU_economics are vital for dissecting these trends and sharing diverse perspectives. Join the conversation. Your insights help shape a smarter, more responsive economic future. The dialogue continues, and your voice matters.